Dylan, that drop seems to have caught a lot of people by surprise. Are you amongst that lot?
Yeah, most certainly. I mean, the Chinese market and the growth of this gaming industry in China is worth, I mean, in the first quarter alone, it was worth 65 billion yuan. So, I mean, it's a 10% year-on-year growth industry. So it's a massive industry in China, and it's certainly growing, and it's taking the world certainly by storm.
Yeah. Inside those components, where was the biggest surprise?
The biggest surprise has come from basically the regulators in China. They've effectively, over the last 4 months, not allowed any of these online games to be distributed further. They've had a freeze in the online gaming space. Well, not specifically online gaming space. The reason for the slowdown is basically Chinese companies have been trying to, Tencent itself has been trying to westernize the actual games that they're publicizing. So the likes of Fortnite and PUBG, they're trying to westernize it to create a bit more online gaming to allow them to interact with other people through online. And the Chinese regulators don't like that, and they've actually put a halt on the industry for the last 4 months, which hasn't been news on the headlines, so no one's really seen that. So we've only now noticed that actually this gaming industry has been on freeze for the last 4 months.
Sure. So I'm reading here on the internet that Chinese importers are shunning U.S. crude despite tariff reversal. And here you're telling me that in terms of those games that Tencent was trying to put on hold, the regulators now are making it difficult for them even to try and engage. Could we be seeing here a spilling over, if you like, of that wider trade dispute coming into play on counters such as Tencent?
Yeah, most certainly. I mean, we've seen this trade debate actually spreading quite wide. But what has been happening over the last 2 years, and it's a known thing, is that the Chinese regulators across the board have trying to be clamping down. Obviously, they've got a very sort of protectionism policy themselves, and they don't allow the content. They screen a lot of the content that goes into China anyway. So the likelihood of them allowing open content to be freely through into China and out of China, and imposing tariffs on this and actually regulation has been coming for a while now. And it is still an emerging market, although it does massive volumes. I mean, as they grow to a developed market, the regulation is going to get tighter and more stringent.
Yeah, but let's be clear here. This is not terminal. This is not a company in crisis, because we're still talking a revenue increase of 30% year on year. And you're also seeing, though this is, of course, the slowest revenue growth since the second quarter of 2015. Going forward, does this company have any cylinders where it could potentially try to mitigate the impact of these regulatory moves?
So for now, it's unfreeze. I mean, the uncertainties cause a lot of concern for the stock. I mean, since they announced this, they gave the guidance in the first quarter results, the stock's down over 26%. So, I mean, what we are seeing is a massive slowdown. The gaming industry is still massive. But going forward from here, the guidances they have given is more of a slowdown towards the stock. And obviously the miss in terms of estimates and that, we're going to have an analyst ratings coming out. So it's a negative sentiment at the moment on the stock. So it could actually, from here, probably weaken a little bit more over the coming weeks.
Quickly, so today we're seeing Naspers under pressure, I think 8% and down 10% at one point. Is the market overreacting here?
Yeah, most certainly. I mean, Naspers does have a large stake in Tencent. They sold a lot of their stake, surprisingly, at the highs of Naspers of Tencent this year, at just about 400.
Are you saying they knew something?
So, I mean, if you look at the news headlines, where, I mean, no one knows about the 4 months of regulatory freeze in the gaming industry in China, and now I would say Naspers sold their stake around 3 months ago. So they must have known something about the gaming freeze and the slowdown in revenue growth.
Thank you for the story. We shall follow it up and see if we can get it to the bottom of it. Let's talk a little bit about the backdrop to the bigger stories, some of the stories that we're seeing on the markets, which is, of course, the trade dispute. We've seen now sort of a spreading, if you like, of the dispute between Washington and Ankara. Do you see any kind of conclusion there?
Yes, I mean, the amount of tariffs that they're going to, it has to come to a conclusion. I mean, Turkey's gone back and fired with sort of 120% tariffs on automobiles coming into Turkey, and also on rice, another 140%. So main things like that are, I mean, it's crazy to think that they can up the tariff by 140%. So they might have to come to some form of agreement. I don't know how they're going to manage to twist Donald Trump's arm, but it's going to be, I mean, it's basically a wait and see at the market. But the uncertainty is causing the market a lot of sort of pressure at the moment. Yeah,
another thought just struck me, but also on the US side, I mean, this guy is going to be building a big Treasury Department or a Customs Department to try to deal with all these tariffs, because he's fighting everybody. He's fighting the Mexicans, he's fighting the Japanese, well, the Japanese to a lesser extent, he's fighting the Europeans, the Chinese, the Russians, etc., everybody.
Yeah, I mean, he's fighting his biggest trade partners. So what he's saying is that obviously this globalization and free trade is something that he doesn't agree with, and obviously wants to change the basis that we've been tending towards for over 30 years. So, I mean, this is a complete shift in terms of how we've been dealing and dealing with trade over the last 30 years. So, I mean, naturally we should see a slowdown in growth going forward. Based on the fact of new tariffs coming in, and we could possibly see him looking to spur inflation through these tariffs.
Yeah, I don't know. This guy, he's amazing. It's all I have to say. So this presents our strategists, this presents our portfolio managers with a chance to relook things inside those portfolios, isn't it? Where do you go? What do you take out? Where do you put it? So
what we have been seeing, I mean, China has been slowing from a rate of, on a quarter-by-quarter basis, they have been slowing in terms of GDP growth over the last 2 quarters. Not significantly, but just on a positive perspective, but slower growth rates. What we are seeing a position in the US markets is a bit of a late cycle, economic cycle, positioning into sort of utilities and materials and telecoms. And we've seen that happening over the last 2 months or so. So we are seeing a bit of a repositioning and expectancy of a US slowdown in the next 6 to 12 months.
Are you saying this bull is dying?
It's not dying, it's slowing. I wouldn't say it's dying, it's just going to slow down for a bit. But we go through these cycles and they'll come through. So, I mean, generally hopefully the trade war doesn't become too much of a disaster and it actually ends up in something worse than what Donald Trump's expecting.
Yeah, is that just internationally, or are we also talking developing markets?
So we generally it should be a global story. I mean, if the US starts slowing, China's already slowing, it's already causing contagion risk on emerging markets, as we're seeing locally. I mean, our GDP figures and our growth figures aren't great in South Africa at all. So effectively, it's going to be a contagion. It's going to flow around the world.
But maybe the rand is going to be the savior, because as I'm looking at it right now, 14.67 to the US dollar, down 3% today. We know it was knocked on Monday. We know it was hit on Thursday and Friday. And maybe some clever people will try to make use of that rand. But for now, let's leave it there.
Thank you.
Dylan Bester, he is with Skycastle International Investments.